excited. I am so happy. I am really so thrilled to be right now sharing this amazing.
Hi and welcome to Dark Money Files, the place where we expose the financial frauds that shook the world. Today we're diving deep into Bitconnect, one of the most infamous crypto scams in history. From wild promises of guaranteed returns to a shocking collapse that left investors empty-handed, this story has it all. So buckle up, let's jump right in. How did Bitconnect fool thousands of investors? And what lessons can we learn? Bitconnect offered a lending program that promised investors 1% daily returns, claiming it used an AI trading bot. The bot never existed, and profits came from new investors' money, making it a classic Ponzi scheme. Bitconnect aggressively recruited investors using a multi-level marketing, a so-called MLM structure. MLM relies on a hierarchical system where existing members earn commissions by recruiting new investors, creating a pyramid-like structure. Influencers and promoters spread hype, making people believe it was a legit opportunity. MLM tactics often exploit psychological factors such as social pressure, exclusivity, and promises of financial freedom, making people more likely to invest without questioning the legitimacy of the system. Instead of focusing on actual value or sustainable business practices, MLM-driven schemes like Bitconnect emphasized recruitment over product or service offerings, leading to inevitable collapse when new investors stopped joining. Bitconnect was one of the largest cryptocurrency frauds in history, deceiving thousands of investors worldwide. At its peak, Bitconnect managed to collect over $2.4 billion from unsuspecting investors. The platform promised daily compounding interest of 1%, which would amount to an annual return of 3,700%, an unrealistic and unsustainable figure. The platform's native token, BCC, reached an all-time high of $471 in December 2017, coinciding with Bitcoin's surge to nearly $20,000. However, as scrutiny from regulators increased and skepticism grew, the cracks in Bitconnect's foundation became impossible to ignore. By late 2017, skepticism surrounding Bitconnect was growing. While investors continued to pour money into the platform, cryptocurrency experts and financial analysts began to raise concerns about its unrealistic promises. The guaranteed daily return of 1% was mathematically impossible to sustain indefinitely, and many likened Bitconnect's structure to a classic Ponzi scheme. Regulatory agencies soon took notice. In January 2018, financial watchdogs in Texas and North Carolina issued cease and desist orders, warning that Bitconnect was operating as an unregistered securities offering. This was a critical turning point. Investors started to panic, and trust in the platform began to deteriorate rapidly. Who were the people behind Bitconnect? Bitconnect was masterminded by Satish Kumbani, an Indian national who founded the platform in 2016. He positioned Bitconnect as a revolutionary crypto lending program, promising investors daily compounded interest through a proprietary trading bot. However, investigations later revealed that no such bot existed. Returns were simply paid using funds from new investors. The scheme was aggressively promoted by Glenn Arcaro, Bitconnect's top US-based promoter, who ran a network of influencers to spread hype and recruit new investors. Arcaro encouraged people to get rich quick, leveraging social media and flashy marketing tactics to lure unsuspecting victims. Another key figure was Divyesh Darji, Bitconnect's India head, who oversaw operations in the country. Darji was later arrested in 2025 at Delhi airport after authorities tracked his movements from Dubai. His arrest led to the seizure of $190 million in assets, including luxury properties and high-end vehicles. Just days after the legal warnings, Bitconnect suddenly shut down its lending and exchange platform on January 16, 2018. The announcement blindsided investors, many of whom had thousands or even millions tied up in Bitconnect tokens. Almost immediately, the price of BCC, Bitconnect coin, collapsed by over 90%, wiping out billions in value overnight. Users flooded forums and social media, demanding answers. Lawsuits were filed by desperate investors, claiming they had been misled into believing Bitconnect was a legitimate investment opportunity. It became clear that the entire operation had never been sustainable, relying solely on new investors to fund the illusion of profitability. Who were the victims? Bitconnect's collapse sent shockwaves across the cryptocurrency world, leaving thousands of investors stranded with worthless tokens. The victims came from over 40 countries, spanning North America, Europe, Asia, and Australia. Many were first-time crypto investors, lured in by promises of guaranteed returns and the illusion of a sophisticated trading algorithm. Some of the hardest-hit regions included the United States, India, and the United Kingdom, where Bitconnect had a strong presence through online influencers and promotional events. In Australia, a prominent Bitconnect promoter, John Begatten, was later convicted of providing unlicensed financial advice and banned from managing companies for 5 years. Authorities worldwide scrambled to track and recover stolen funds, but the decentralized nature of cryptocurrency made it difficult. The U.S. Department of Justice managed to seize $56 million in fraud proceeds in 2021, but due to market fluctuations, only $17 million was returned to victims in 2023. This amounted to just 0.7% of the total $2.4 billion fraud. In India, as mentioned earlier in the video, law enforcement cited $190 million in crypto assets and luxury items linked to Bitconnect, including digital wallets, a black Lexus SUV, and $15,500 in cash. Investigators tracked transactions across the dark web, using digital forensics to locate hidden assets. Despite these efforts, the vast majority of stolen funds remain unaccounted for, with estimates suggesting that Bitconnect's total fraud amount, adjusted for Bitcoin's value today, could be worth over $31 billion. The financial devastation left many victims bankrupt, with some losing their life savings. Lawsuits and class action cases followed, but for most investors, the damage was irreversible. As the dust settled, authorities began investigating the scale of the scam. In 2022, Bitconnect founder Satish Kumbhani was indicted for orchestrating a $2.4 billion fraud, but he remains a fugitive, reportedly moving between countries to evade law enforcement. Meanwhile, Glenn Arcaro pleaded guilty to wire fraud conspiracy and was sentenced to 38 months in prison. He was ordered to pay back $24 million to victims, though this was only a fraction of the overall losses. While some investors were able to recover small portions of their funds, the majority were left with nothing. Bitconnect remains one of the most infamous cryptocurrency scams of all time, serving as a cautionary tale for those who blindly chase promises of guaranteed profits in an industry known for its volatility. How to spot a crypto scam. Bitconnect's collapse highlighted key warning signs that investors should always look out for. Guaranteed high returns. If a platform promises fixed daily or monthly profits, it's a major red flag. Crypto markets are volatile, and no legitimate investment can guarantee such returns. No real product or blockchain. Bitconnect never had a functioning trading bot or a legitimate service. It simply recycled investors' money to create an illusion of profits. If the revenue model focuses only on bringing in new investors, it's a Ponzi scheme. Anonymous or shady leadership. Bitconnect's founders operated in secrecy, hiding their identities and avoiding regulation. A lack of transparency in leadership is a clear sign to stay away. Bitconnect was a warning for the entire crypto industry. No matter how much hype surrounds a new project, always research before investing, and never trust too good to be true promises. If you enjoyed this deep dive into one of crypto's biggest scams, make sure to like, subscribe, and comment. Your engagement helps bring more awareness to financial frauds and ensures that these lessons reach more people. And before we wrap up, do scams like Bitconnect still exist today? Let me know your thoughts in the comments.